Did you know that even during tough economic times, investors who bought stocks during the 2008 crisis saw their wealth grow by 5, 10, or even 20 times? And today, in 2025, the outlook might be even better. Dave Ramsey says now is the time to invest in the stock market. But is he right? Or are you missing out on a historic opportunity because of fear? If you want to build long-term wealth, you can't ignore the power of stocks. But investing without a plan is like playing Russian roulette with your money. In this video, I'm going to show you why the stock market is ready to soar, how to avoid emotional traps, and which sectors are the best bets to invest in today. Don't get caught off guard. Like this video, comment, "I want to invest," if you believe in the market potential too, and subscribe so you don't miss the next videos. The stock market, a wealth-building machine. For over a century, the stock market has been a powerful engine for wealth creation. Despite wars, economic crises, and global pandemics, it has always found ways to bounce back and reach new highs. In 2025, this historic resilience is still strong, offering unique opportunities for patient, disciplined investors. Data from the Federal Reserve shows that the average net worth of American households invested in the stock market is 8 times higher than those relying solely on savings and real estate. This huge difference proves just how transformative investing in stocks can be when done consistently. The key is understanding that downturns are temporary, but the gains you build up over time are permanent. Companies like Nvidia and Meta are recent examples of this dynamic. Even though they experienced drops of over 50% at times, those who stuck with their investments saw their wealth multiply. That's the magic of time in the market. It rewards those who stay calm during the storms. Why now is the time? 2025 brings a rare combination of favorable economic factors for the stock market. Global inflation is finally easing after years of pressure, while interest rates are starting to show signs of loosening. This environment sets the stage for a new phase of stock market growth, with multiple sectors ready to take off. Analysts at Goldman Sachs project that the S&P 500 could hit new highs this year, driven by strong corporate performance and the return of global economic growth. Sectors like technology and consumer discretionary are leading this recovery, with surprisingly resilient profit margins even amid geopolitical uncertainty. The most important thing to remember is that waiting for the perfect moment to invest is a huge mistake. Historically, the biggest gains happen during the early months of a market recovery, when most investors are still frozen by fear. Those who get in early reap the sweetest rewards. The fatal mistake 95% of investors make, trying to guess the best time to enter and exit the market, is the main reason people lose wealth. Studies from Dalbar show that the average investor earns much lower returns than the market itself, all because of emotional, impulsive decisions. The difference is so shocking it's actually alarming. The problem only gets worse with the flood of contradictory information we face every day. One day, the headlines say the market is about to crash, and the next it's shooting to the moon. This noisy back and forth pushes many investors to act rashly, selling low and buying high. The exact opposite of what they should be doing. The solution? A simple strategy of making regular investments, no matter what's happening in the short term. This approach, known as dollar-cost averaging, eliminates the need to predict the market and ensures you buy more shares when prices are low and fewer when they're high. Consistency beats brilliance over the long run. Sectors set to boom in 2025. The AI revolution is just starting to show its true transformative power. Companies developing specialized chips, generative AI platforms, and enterprise solutions based on machine learning are creating value at an accelerated pace. This isn't just a passing trend. It's a structural change in how every industry operates. In the renewable energy space, the mix of new technology and regulatory pressure is creating unprecedented opportunities. Companies working on energy storage, green hydrogen, and smart grid solutions are positioned for explosive growth in the next decade. The sector is getting record investments from both governments and the private sector. Biotechnology is entering a golden era, with breakthroughs in genetic therapies, personalized medicine, and treatments for previously incurable diseases. The aging global population and rising incomes in emerging markets are driving massive demand for innovative medical solutions. Long-term investors are already paying close attention. The danger of doom spending. Doom spending is a dangerous mix of economic pessimism and compulsive spending. Research shows that many millennials and Gen Zers are spending up to 40% of their income on non-essential items, reasoning that the future is uncertain anyway. This mindset is economically self-destructive and seriously undermines long-term wealth building. The irony is that while these people spend their money on things that lose value fast, true investors are using this time to buy assets that generate passive income. The difference in wealth between these two groups in 10 years will be massive. Impulsive spending might bring short-term satisfaction, but only disciplined investing leads to real financial freedom. The answer lies in a mindset shift. Instead of seeing the future as scary and out of control, view it as a series of opportunities to seize. Those who make this mental transition reap not only financial rewards, but also peace of mind and security for the future. The truth about critics and haters. In the world of finance, criticism and opposing opinions are inevitable. Dave Ramsey, just like Warren Buffett and other successful investors, faces a daily flood of negative comments. The key lesson here is that opinions are cheap, but results speak for themselves. The greatest investors in history were often mocked before they were celebrated. Cancel culture and online trolls are especially active in financial discussions. Many of these critics have never built significant wealth themselves, yet they feel entitled to comment on everything. Smart investors learn to filter out this noise, focusing only on credible sources and solid data. The most effective strategy is simple. Ignore the haters, stick to your plan, and let your results speak for themselves. The market doesn't reward those with the most popular opinions. It rewards those who make the smartest decisions over time. Your investment portfolio is your best answer to the critics. The financial system doesn't want you to know this. Financial institutions make billions by keeping people trapped in endless cycles of debt and low-return products. High-interest credit cards, predatory personal loans, and investment funds with hidden fees are carefully designed to drain your wealth. This system thrives on misinformation and the lack of financial education. The cruel irony is that while many people are paying 20% interest on credit card debt, banks are using that same money to invest in the stock market, earning average returns of 10% a year. That 30% difference in cash flow is what keeps the rich getting richer while the middle class stays stuck. Breaking out of this cycle is essential for achieving financial independence. The good news is that access to the stock market has never been easier. With investment apps and low-cost ETFs, anyone can start investing with a small amount of money. The secret is to start early, be consistent, and never lose sight of the power of compounding. Your financial freedom begins when you decide to take control of your future. If there's one lesson 2025 is teaching us, it's this. Fear paralyzes, but smart action builds wealth. The stock market is full of opportunities, but only those who are prepared will reap the rewards. Dave Ramsey is right. This is a time to invest, not to run away. To sum up, history shows that stocks always bounce back and create long-term wealth. Real estate has its value, but stocks offer better liquidity and returns. Crises are hidden opportunities. Be ready to act. Ignore the noise from haters and focus on what really matters, your financial future. And remember, your financial freedom journey starts now. Click the link in the video description to unlock the ebook packed with investing secrets, mindset shifts, and wealth-building strategies. Don't let your money sit idle. Start today. Like, share, and comment. I'm going to invest if you're ready to take charge of your financial future.